Bitcoin's top buyers are selling heavily, with Glassnode calling it a moderate capitulation event. Buyers who entered near Bitcoin's $109,000 peak in January are now panic selling, with Glassnode warning that Bitcoin could slide to $70,000. Glassnode reports intense loss realization and a decline in market momentum. Short-term holders are deeply underwater between $71,300 and $91,900, signaling weakened demand strength. 10x Research labels the correction textbook, with 70% of selling coming from investors who bought in the last 3 months. BitMEX co-founder Arthur Hayes suggests Bitcoin may retest $78,000 and, if that fails, could drop to $75,000. Bitcoin previously experienced a similar sell-off in August, falling from $68,000 to $49,000. Despite the correction, Bitcoin spiked 7.5% in the past 24 hours as markets stabilized. XRP's price action signals further downside, with a bottom near $1.60 possible. XRP recorded its lowest candle close in 99 days on March 10, briefly recovering 12% on March 11. Short-term support at $2 remains critical, but bearish trends persist. Spot CVD dropped by 50% in March, indicating more selling than buying. Futures traders have also turned bearish, with perpetual CVD dropping to minus $1.18 billion and funding rates turning negative. Whales have offloaded $838 million in XRP positions over the past week, intensifying the distribution phase. The breakdown of a head and shoulders pattern suggests lower prices ahead, with a likely retest of the $1.60 to $1.90 range. Failure to hold this zone could lead to a drop between $1.58 and $1.27. Dogecoin has dropped 8% on March 11, rejecting a key resistance zone and signaling a deeper correction. The meme coin is down 41% since March 3, with its lowest price in 4 months at $0.142. Meme coin sector weakness continues, with SHIB down 7%, Pepe falling 8%, and SPX plunging 28%. The combined market cap for meme coins has dropped 7.5%, wiping out $4.54 billion. Doge liquidations exceeded $23.1 million in long positions over the last 24 hours, with a total of $161 million liquidated since February 24. Open interest has dropped 37% in the past 7 days, signaling trader exit. Doge faces resistance at 24 cents to 26 cents and additional pressure at $0.3129. Support lies between $0.150 and $0.127, a crucial zone that previously triggered a 227% rally. Failure to hold could lead to further declines toward 10 cents. Bitcoin rebounded past $82,000 but quickly reversed following new U.S. tariff announcements. BTC hit a local high of $82,154 before consolidating. U.S. job openings data slightly exceeded expectations, but Trump's new trade tariffs on Canada spooked markets. The S&P 500 is down 0.5% on the day, continuing its volatility. QCP Capital notes that Trump's stance on recession risks increases pressure on risk assets, but falling Treasury yields and a weaker dollar provide some support. The U.S. dollar index, DXY, dropped to 103.32, its lowest since October 2024. Bitcoin remains at a crossroads, with resistance levels still holding. Analysts suggest BTC could form a bottom here, but a sustained breakout is needed for confirmation. Bitcoin's correction may be ending, supported by derivatives markets, a weaker dollar, and risks from the U.S. budget crisis. BTC hit a 4-month low of $76,700 on March 11, following a 6% S&P 500 drop. Despite a 30% decline from its $109,350 all-time high, key indicators suggest Bitcoin remains in an uptrend. Unlike the 2021 bear market, BTC's correction remains within historical norms, with no signs of mass investor exit to cash positions. Bitcoin's derivatives market remains stable, with futures premiums holding at 4.5%. Funding rates are near zero, signaling balanced leverage. Investors remain cautious as major tech stocks, including Tesla, Nvidia, and Blackstone, post significant declines. A potential U.S. government shutdown on March 15 adds further uncertainty. Early signs of a real estate crisis could accelerate capital outflows into scarce assets like Bitcoin. FHA loan delinquencies surpassing 2008 crisis levels highlight broader economic risks. Bitcoin's path to reclaiming $90,000 is supported by a weaker dollar, strong derivatives market, and macroeconomic uncertainty.